to be demand-driven. That's all I can say. And this goes in, I think of Jay Pulaski and the call on a booming Asia, a booming Pacific Rim. Well, that tells me higher demand for hydrocarbons.
And potentially higher inflation, more persistent, and potentially the Fed has to do more, and then we are compromised at the valuation level for some of these stocks, Tom.
Let's go to the stocks of the United States of America, and we are thrilled to announce that Providence's Citizens Group, I'm using that within the old terminology of Citizens Bank, they have taken on JMP Securities, a fabulous, I'm going to call more technology, more equity shop, a real nice transaction at the end of the year. Devin Ryan joins us, Director of Financial Technology Research at JMP Securities, a Citizens company. Devin, I want to get right to it, which is your discussion of Goldman Sachs in new initiatives. Clearly, we heard that from JP Morgan, that they are going to spend on new initiatives. What is the best use of money for banks looking for new initiatives?
Well, Tom, I think the key data point that I'm looking at is that the financial technology industry raised $130 billion of capital last year. And so if you think about that, banks are competing with these fintech disruptors that are in the market right now. And so what you heard from JP Morgan, and I think what you're seeing at firms like Goldman Sachs, is that they are really leaning in on investment into their digital capabilities, both internally around data and how they can use data smarter and helping optimize the customer outcome, but also their direct-to-consumer platform, whether it's on mobile or using AI to help bring together all the financial products. So Goldman, one of their biggest initiatives right now is in their consumer and wealth management business. They've made a lot of progress. We think they're hitting on their targets, and they're doing terrific there. And then they're also disrupting, in our opinion, kind of the transaction banking, which is really, cash management for corporations. And, they're entering that market and have done really nicely over the last couple of years with a differentiated offering relative to some of the other large banks. So I think it's all about investment right now.
What is David Solomon, and for that matter, what has James Dimon or Brian Moynihan learned from Marcus, the retail expansion of Goldman Sachs? What are the lessons learned there?
Well, I think the lessons are that the next generation bank doesn't necessarily have to have a lot of branches, right? And so Goldman Sachs, Marcus doesn't have branches. And as a result of that, they have a very low cost of their overall infrastructure relative to some of the traditional banks, meaning people and branches and other infrastructure. And so some of that cost savings can then get reinvested back to the end consumer, so you can give them better pricing or a better experience. And so I think Goldman's seen terrific growth around that business and having, not having this legacy platform and legacy technology has been very beneficial. So I think you're seeing firms like JP Morgan and Bank of America and Citigroup investing substantially in their technology initiatives, again, to be competitive in kind of this new world of what banking looks like.
Devin, has Goldman made enough progress with Marcus, with other initiatives, to be considered more of a lending bank at a time when yields are rising, and that seems to be driving some of the optimism around the financials?
Yeah, it's a great question. I mean, it's still very early days. They were the fastest fintech, if you will, if you looked at them as their own company, to get to $1 billion in revenue. So they're doing well relative to the industry, and they are growing at a really nice rate. The business, if you think about consumer overall, it's a small piece of Goldman's overall business, call it 10%. I think that over the long term, this becomes a very meaningful piece of their business, could be 30% of overall revenues. But right now, I don't think Goldman's viewed as much as kind of this play on interest rates, or they're not getting quite that benefit. It's a little bit of a different story. That being said, we think their underlying growth is stronger than probably pretty much any other large financial institution right now, and that because of these initiatives like Marcus and like what they're doing in transaction bank.
Do you think that it's been priced in, Devin?
It's had a great run. We were arguing this at $200, and now we're in the $400 ballpark. We moved up dramatically. I still think there's another leg here in the stock if they continue to execute. I heard the kind of the intro here. This is all about right now for financials and bank stocks. It's about the economy, which is, interest rates are, in our opinion, going to be very much tied to what happens to the economy. And I think that if the economy continues to be strong, then firms like Goldman Sachs will do very well. Vice versa, if the economy can't withstand 3 or 4 rate hikes here, then I think that's going to be an issue for bank stocks. And so that's kind of the one point. And the other point is, how do they continue to invest in their business? And we think that they're doing quite well, as we just talked about. So we do see another leg up here into the upper $400 range for Goldman Sachs, but it's been a nice performer as well. So there's been a relatively high bar for Goldman and other financial stocks as well.
Lisa, don't you get the feeling that people like Jamie Dimon at JP Morgan has journalists on strings sometimes, that we come away from that call on Friday and wrote all these stories about how many rate hikes Jamie Dimon's looking for with the stock down hard? No one was talking about the earnings after that. They weren't talking about expenses. They were talking about Jamie Dimon's call for rate hikes. Let's get back to the compensation story, Lisa.
Yes.
The FT wrote it up. An extra $2.5 billion earmarked for compensation and travel expenses. Lisa, what are the numbers we're looking for from Goldman today? The kind of bonuses that people might be getting over the next few days?
Sridhar Natarajan and other Bloomberg reporters talked about the boon in the commodities sector and the commodities trading sector for Goldman Sachs, and how top traders there could make north of $30 million in terms of their bonus as a result of making more than $1 billion for that unit. How much is that going to be a focus at a time when compensation really seemed to hang on JP Morgan's earnings?
Devin, can I come to you on this? Just how big is the exodus of these banks going to be in the coming months? They all get paid. Do they all start to move around? Is it musical chairs? I'm just trying to gauge what the next few years actually looks like. I'm convinced that the C-suite just want to do this once. They don't want to do this again. Are they going to have to repeat the act in the next few years?
Yeah, well, it's a great question. And ultimately, we're coming off of a record investment banking and capital markets year where trading revenues and investment banking revenues were a record. And so in that type of backdrop, you see a lot of competition for talent. And that's what's happening this year. There's been expense inflation across the board, but no doubt in compensation. I think that as a result of that, there's going to be firms that are willing to pay up as well for talent, because to your point, oftentimes you see these musical chair backdrops when the environment is still strong. The flip side is that, this is all correlated. So you can't have 4 interest rate hikes into an economy that maybe can't withstand that, at the same time expect that capital markets is going to remain as strong as it was in 2021. The flip side is if the economy remains incredibly strong, which is right now the current outlook, then capital markets will do well and compensation is going to do well. So I think compensation is almost secondary. It's more about the economy and about the backdrop for capital markets, and it's all correlated with this conversation around rates. So the Fed's really threading a needle here, in our opinion, around getting this right, because we're in a kind of a tough spot after we've had a very significant move in these financial stocks over the last couple months into this.
A massive move, worldwide for that matter as well. Hey, Devin, fantastic to catch up, sir. Devin Ryan there of JMP Securities. A little bit later this morning, 7:30 Eastern time, about 50 minutes or so away, Goldman Sachs earnings. Tom, I think it was Connor Sen of Bloomberg Opinion that wrote out going into the weekend. He just wrote out on Twitter, for the first time in a long, long time, I don't know how long, maybe more than a decade, we're talking about inflation, cost inflation, people getting hired, expenses going up in a material way. We're not talking about cost cuts. We're not talking about layoffs on Wall Street. It's just been a massive change.
But the massive change is also that they're doing new projects. I mean, basically the banks are going to be the innovators and the ones that aren't. Craig Moffett just does a nice piece on Elon Musk over at MoffettNathanson, granted different industry, different topic. But I love the idea of go big or go home. I mean, is that what we're hearing, John, from these banks? Go big or go home. I think it's dead on.
Lisa, that link between the Fed and compensation, not lost on you.
I mean, how much of this is dependent on the cycle, and how much is an individual trader worth in terms of the dynamism of a specific bank?
Call one up, they'll tell you. Be honest.
Thanks, I appreciate that, John.
Down 1.1 on the S&P. On the NASDAQ, we're down 1.75%. Yields are higher too. Tons to talk about this Tuesday morning. Good morning to you all. This is Bloomberg.
With the First Word News, I'm Laura Wright. Brent oil extended its gains today to the highest level in more than 7 years. A number of reasons are being cited, among them geopolitical tensions in the Middle East and an easing of concerns about the pandemic's impact. Brent rose above $87 a barrel, while West Texas Intermediate went over $85 at one point. The British government reportedly may end mandatory self-isolation for positive COVID cases as early as March. According to The Guardian newspaper, authorities also plan to end most other restrictions, including remote working guidance and COVID passports. That's seen as a sign that Prime Minister Boris Johnson is prepared to let the UK live with the virus. North Korea has confirmed the latest in its big string of missile launches since 2019. Kim Jong-un's regime said it tested 2 tactical guided missiles on Monday. It's the 4th set of launches this month. Kim has told ruling party officials he's more interested in bolstering his arsenal than in returning to nuclear talks with the US. Car sales in Europe plunged 22% last month. That capped the worst year for automakers on the continent since a trade association started tracking the market back in the 90s. The industry was hurt by a shortage of semiconductors that is expected to last through much of this year. Donald Trump is planning an expansion of one of his biggest properties, Trump National Doral in Miami. The former president says he will apply to create 2,300 homes as well as retail and commercial space in the first phase. He calls it perhaps the most exciting development in the country. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
Big effort to have more African Americans and more women on boards, but do you think that will last?
I believe that we are seeing a real paradigm shift where we understand that diversity in the boardroom is more than one.
Do you think that electric vehicles could reach 10% of the American market by the end of this year?
That's difficult to say, like you said, because it'll be both, not only demand, based on the demand we are seeing for our vehicles, and the rest of the industry is seeing. It feels like the demand is certainly there. But the question will be how quickly can we, all of us, execute to build capacity to meet that demand. And that's what we are very busy doing. Within the next 24 months, we expect to get to about 600,000 battery electric units globally. And that's before our bigger investments that we're making in Kentucky and Tennessee, both for batteries as well as assembly, come online, because they don't come online until about 2025.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
In crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It is an open question as to whether or not Omicron is going to be the live virus vaccination that everyone is hoping for, because you have such a great deal of variability with new variants emerging.
Dr. Fauci there, speaking with the World Economic Forum. From New York with Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. What a morning in this market. Futures down and down hard. Off the lows, though, on the S&P, we're still negative more than 1%, negative 1.7% on the NASDAQ 100. Yields higher on 2s through 1%, on 10s through 180. 181.45 on 10s right now. Yields higher by 3 basis points. Crude at 85.19 on WTI on Brent. Very briefly through 88. Numbers, levels we haven't visited since 2014. It has been a while. Just comparing that Dr. Fauci quote to a line from the Pfizer chief executive, Tom, speaking to a French newspaper. We will soon be able to resume a normal life. We are well positioned to get there in the spring thanks to all the tools at our disposal, tests, very effective vaccines, and the first treatments that can be taken at home. The hope of the Pfizer CEO, I think, is what a lot of people in these markets, economists on Wall Street, are thinking about too, Tom. Maybe some weakness near term to start the year, but as the year progresses, the outlook gets better.
I am so glad you brought this up, John, because to me it is just massively confusing. I think, John, more than any other time, the agony of Delta, the original months of early 2020, John, do you feel as confused as I feel?
I'm always feeling confused about where we are at the moment, Tom. I also think we've reduced the debate in economics just to one inflation number and what can we do about it. There's a lot more going on than just that.
Well, there's a lot more going on here. And again, we'll do more data checks here. It is an eventful Tuesday, to say the least. Amish Adalja with us right now, senior scholar at Johns Hopkins Center for Health Securities. Amish, I look at where we are, and the confusion I see is that coming up next weekend, the Rams will play the Buccaneers in Tampa, and something like 65,618 people will gather to see Tom Brady throw the football around. How does a pro like you respond to that? If John and I and Lisa are baffled over Omicron, how do you respond to 65,000 people all together?
You have to realize that people have different risk tolerances and different values that they're going to pursue. And COVID-19 is not going anywhere. COVID-19 is going to be around for next year's NFL playoffs as well. What we're trying to do is shift the spectrum of illness to the mild side with all the tools that we have and with vaccines. And I think that what you'll see is people get back to their activities as their risk tolerance dictates. And for some people, they may never enter a football stadium again. But for other people, they're ready to do so. And I think that's what's going to happen when you deal with an endemic disease. People are going to have different paths.
How does CDC in Atlanta, or how does the Buffalo Bills fan, the governor of New York State, how do they deal with this single new word, endemic?
What that means is they have to match it with another word, sustainable, so that what public health measures they have in place can't be from a perpetual state of emergency. They have to be sustainable. They have to recognize that COVID-19 is part of a constellation of respiratory viruses, including influenza, that are going to plague us, basically for the existence of our species. And what you focus on is the severe cases, trying to prevent cases that are inevitably going to occur from turning severe by making sure you've got tests and monoclonal antibodies and vaccines and antivirals, and that you help hospitals when they get through when they are in tough spots. Right now, many hospitals are in tough spots because of Omicron, but after this Omicron surge ebbs, and it looks like it's peaking in certain parts of the country, we will be in a different place. And I think at that time, with enough of the Pfizer antiviral, enough of the GSK monoclonal antibody, we should be able to handle this much more like other respiratory viruses.
To Fauci's point, though, this concern is that even if people get sort of natural immunity by getting Omicron, it's not going to protect them from additional variants, and it may not really protect them from getting that same variant down the line. What's the latest on the protective quality of getting sick, of having all of the boosters and everything like that going forward?
What it was likely the case is that if you get Omicron, you're probably unlikely to get Omicron for at least several months after that. And if you do get it, it may be mild. We know that there are other coronaviruses, 4 of them actually, that cause about 25% of our common colds, and they reinfect at will. This is probably where COVID-19 is going. It's going to become the 5th seasonal coronavirus. But if those reinfections are mild, if they're not sending people to the hospital, that's a win. Because remember, this virus isn't going anywhere. So we're inevitably going to get reinfected and get COVID many times over our lives. That's just a simple biological fact based on what coronaviruses do. But if those are mild, and if they aren't able to crush hospitals, I think we're in the place that we want to be with this virus. And yes, there's going to be new variants. Yeah, COVID's not going to be at 0, but we're going to be in a much better position where we can handle this much like other respiratory viruses. And that's always been the goal, not eradication, not elimination. So I think we still are on track to have that happen. And I think we have to stop worrying about mild cases, because if the mild cases don't translate into hospitalization, then we've got a win here.
Dr. Adaljo, when you talk about mild cases, it would be great to put some perspective on this. If COVID is going to become the new flu and we're just going to get seasons like this, is it going to be considered more deadly than the flu after all of these remedies and vaccines are factored in?
For the first couple of years, I suspect it will have a higher death toll than the average flu season. But we are getting drugs like Paxlovid. We have monoclonal antibodies. We have a better vaccine. So a lot of tools that we don't have for influenza exist for COVID-19, and more are coming. So I do think that you will see the case fatality ratio drop to around seasonal flu after maybe 2 years, I think, in terms of the immunity and getting those tools out there. But we will see this in addition to flu. And yes, there's going to be a baseline number of hospitalizations and deaths. That's not something we can avoid. But I think it will start to regress down towards what the other coronaviruses do over time, with the tools, with the immunity that we're engendering with vaccines and people getting infected.
Doctor, thank you. As always, Dr. Amish Adalja there of Johns Hopkins. Endgame. How many times have we mentioned that? The end game. And then been very wrong. But once again, we're talking about the end game. Over the weekend, a story in The Guardian, Tom, citing a senior source around the government. The UK government is looking at ending mandatory self-isolation for positive COVID-19 cases, replacing it with guidance. They go on to say the government is likely to lift the requirement for travellers to take a test after returning from abroad. All of this could end by March, Tom. That's the government in the UK right now preparing for the end game.
My head is spinning over this. John, I honestly don't know which way to turn, particularly as we come out of Martin Luther King Day and everybody starts looking at February and March vacations and such. I have no idea where we're going in terms of testing this or testing that.
Well, looking to the UK right now, the problem the UK has at the moment, Tom, is this being shaped by the polls or is this being shaped by the science? We hope it's the latter and not the former. The fact we're asking that question, and others are too, the government has a bit of a credibility problem at the moment.
You know, this is a good time then, folks, not to talk about the Tots and Leicester coming up tomorrow. But, John, does the Prime Minister make it to next weekend?
Tom, the Prime Minister has done some questionable things over the last couple of years, and it hasn't shown up in the polls. This time it's shown up in the polls.
Really? Yeah.
That's the difference this time around.
What's the difference between him and Theresa May? I think Americans want to know that, John.
I think Americans know the difference between Boris Johnson and Theresa May. You want me to tell you? I think you know
in 30 seconds.
The difference between Theresa May and Boris Johnson. Why aren't they playing the music? Play the music. Futures up 52, down 52 on the S&P. Turn it up louder. Down by 1.1%. On the Nasdaq 100, we're down by 1.8%. Tom, it's my first day back. I'm trying to stay out of trouble. Yields up 3 on 10s. Thanks, Tom.
Sterling is sterling.
181.45 on 10s. From New York, this is Bloomberg.
all that chocolate makes it to the supermarkets in time for Christmas. I'm James Walcock, and I got really curious how chocolate makes its way to the supermarkets every Christmas. So I came here to Nestle's distribution centre to find out how it works. Almost 120 lorries come here every day, and they drop off coffee, chocolate, Kit Kats, Toffee Crisp, you name it. If it's made by Nestle, it will come through here, and it will get sorted by machines who will then load it onto a monorail that runs right up and down the facility. Automated cranes, like this one coming in behind me now, then load all of the chocolate, storage, all of Nestle's goods into this big warehouse. It can hold up to 100,000 crates. And then after it's been sorted and stored, sometimes for months, it will then end up over here, where then lorries will then take it out to supermarkets up and down the country. You can see the entire process is done without people. Goods can come and leave, sometimes without ever touching human hands. It's one of the largest automated centres in the UK, and it opened during COVID. So this Xmas is its first big test, and so far, it looks like things are going well.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
There's going to be a push-pull between the fear of the Fed and Fed moving off of ultra accommodation.
The interest rate environment is probably the most important economic backdrop over the course of this year.
That valuation support is not particularly good in some segments of the market.
A lot of froth, a lot of money has gone out of some of the more speculative parts of the market.
This is an opportunistic stock picker's market, but you have to do your homework.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
What a move in this bond market from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures on the S&P down 1%, on the NASDAQ 100 down 1.7%. Yields, Tom, on twos through 1%.
Yeah, through 1% is the big headline for me today. John, what I would underscore is on a 4-day work week, we're sliding into Tuesday. No, we're not. There's some real market action out there, and it's going to cut different ways depending on what Goldman Sachs does, but far more the earnings tone into this week and critically into next week is, to me, just the key point. Mike Wilson at Morgan Stanley emphasizes that
just
this
a ton of research this morning, Tom. Mike Wilson, looking for 4,400 year-end on the S&P. RBC looking for 50-50, and Laurie Calvasina saying the following, Tom. This will dictate the rest of this year. This tug of war between the tailwinds of a strong economy and the headwinds of more hawkish monetary policy in early 22.
Yeah, there's no question about that. I'm going to put up here a banner, folks. This is how we make the sausage on Bloomberg Surveillance, and it's simple. I put the Stolfus divide, but I can't spell John's name right now. John, how about the Wilson-Golub divide? I mean, we need to reframe right now the huge divide we see between the bulls and the bears.
Lisa, the difference, 4,400 at the low end through 5,250 through 5,300 at the top end.
Lori Calvasina came out and she said, look, the range is really wide. We admit that, but that's because the market right now is torn between an above average economic growth trajectory and policy from the Fed that's likely to be a lot more hawkish than many equity investors think. How do we dovetail that? And it really goes back to the Fed put. When does the Fed come back into play as a result of market disruption?
Well, Bob Michael at JP Morgan Asset Management says it's much lower than you think. If you're looking at the equity market, it's a whole lot lower. The question you asked in the previous hour, I think, is the additional important one at the moment as well, Lisa. 4 hikes is the base case now for so many people. Where is the upside surprise coming from?
And this goes to PGIM's point, right? PGIM fixed income that says this is a buy. This is a buy for some of these bonds with yields at these levels. At the same time, if you start to see wage increases at the levels that people had previously expected, is that a potential game changer for the longer term inflation outlook?
To you that follow this more than I do, is the PGIM call an outlier call where they're saying step in here and buy the price for lower yields?
Yeah, if you actually look at most forecasts, people seem to think the longer term Treasury yield is going to continue to go up. But then you've got on the other side the Stephen Majors of the world and the PGIM fixed income. And this is the push-pull at a moment that is highly tenuous. Are we going to go back to the normal that we saw 3 years ago?
Not much higher, though.
Right.
So the calls out there at the moment, what are they, Lisa? 225.
Right.
The calls on the Fed at the moment, where does that Fed funds peak? Something a little north of 2%.
Right.
I don't think we fully recognize the real adjustment in that debate just yet.
No, I think that you're right. However, I do think that a lot of people are uncertain, and you can see people trying to hedge against this upside, which is a reason why people are so underweight bonds.